Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Thursday, September 8th. Just a quick reminder, if you like this type of content, every day that the stock market is open, we release one of these quick little videos. So be sure to subscribe. And every weekend, we release a longer video that goes more in depth and has some more commentary and analysis on the markets, what's going on in the economy and stuff like that. So be sure to subscribe here on YouTube, follow us wherever you listen to podcasts. But let's get right into it. Today, stock market finished up again. S&P 500 was up 0.7%, or 0.66% rather. The Dow Jones was up 0.61%. The NASDAQ was up 0.6%. So green day today across the board. Fed Chair Powell spoke in the morning, where he said that he believes that inflation is still really high, and that he's going to keep raising rates until the job is done. I also thought it was interesting how he mentioned that history strongly advises against pivoting too early and loosening the economy too early. Obviously, that's what happened in the 70s, and they had sticky inflation for quite some time, and he really does not want a repeat of that. So I do believe that he's going to do his best to make sure that doesn't happen again, whether it happens again or not. There are some people that believe that it won't happen again due to the Fed. There are some people that believe it won't happen again due to a rapid advancement of technology that wasn't around in the 70s. We talked about that this weekend. That's what Cathie Wood believes. And then there are people that think that the Fed will have to pivot because something will break and that our economy is kind of spiraling. So there's people in all different camps. We kind of talked about that this weekend. So if you haven't watched the weekend video, be sure to go ahead and do that. It was a good one. But let's take a look at the markets here. So the S&P 500 actually closed above 4,000 again. Obviously, that's a big psychological level. There's also a zone that it broke through that we'll look at in just a second. But the S&P 500 is down about 16% year to date, a little less than that. The Dow's down 12.5%, and the NASDAQ's down just over 24%. But let's take a look at what I'm talking about on the S&P 500. So yesterday, we got just to the top of this zone, which is just shy of 4,000, and then today we kind of went lower and then surged higher through the end of the day. So we actually did break through this zone. Now, just because we broke through this zone doesn't mean that we're entering into a bullish trend. We saw a breakthrough here, and then after the Jackson Hole speech, we really sold off, and that's where we've been for a few days now. But I will say that it does look slightly bullish, that we kind of had our lows in June. We popped off the channel line. We came to the trend line, and then now we're kind of making a higher low, if you count this as a low, and you count this as a low maybe even, and then this is a low. So that in itself looks bullish until we break through the June lows. But I'm not saying that the bear market is over. Certainly that's far from happening. I do think that until we break this trend line, and again, every day I have to do this, until we break through this 200-day moving average as well, which right now kind of lines up with the trend line, that'll really signal to me the end of this bearish trend in this decline. But obviously we're far ways from that, but you have to be unbiased. The price action, I mean, it kind of does look bullish. We have a little higher low and a surge and a higher low, and we'll see what happens. So it could be a bull trap for sure. Obviously, we talk about, if you're a long-term investor, the best strategy really is just dollar cost average through something like this, and that history favors the dollar cost averaging strategy through a downturn, as opposed to trying to time the market or not investing at all. So I do think that that's important to mention. Obviously, if you're a trader, there's other things you should be looking at. I obviously wouldn't go all in. If we get up to the trend line or this zone, that could be a sell signal, and vice versa for the channel line and some of these supports. So let's take a look at Bitcoin. Bitcoin, it popped out, even put some pressure on this zone that it went into briefly in the past couple of days, and it popped out. So Bitcoin still looking steady over this resistance. This is obviously a huge support. I do believe that all of the Bitcoin market is looking at this level. Obviously, we know what happens if we break through the 17.5 to the 17.7. There will be a lot of pain. I do believe we make our way back down to the 11,000 mark at least, whether for a short time or for a long time. But I do think that there's not really anything holding it from going that low if we break through this zone. So obviously that's really important. And as Bitcoin starts to make a move, because eventually it will make a big move, it's not just going to stay in this flat little zone forever, which it's been in for about almost 3 months now, which is unlike Bitcoin. Bitcoin's really volatile, makes huge moves. So I do expect something to happen at some point on here, whether that this is the bottom or not. So we'll keep an eye on that, and we'll be sure to find new zones as they become more relevant. But really, Bitcoin's just kind of been in this range for quite some time. So be sure to stay tuned tomorrow for the last episode of the Daily Dose for the week, and for this weekend as we release a new episode of the Weekly Wrap. Again, if you like this content, be sure to subscribe here on YouTube and follow us wherever you listen to podcasts. And until next time, thank you for listening.